Hi everyone, in this video I'm going to do a financial statement analysis of Alphabet stock. I'm going to look at its balance sheet, its income statement, and its statement of cash flows, and I'm going to look at how the company's been performing. Now these results are as of December 31st, 2022, and it's the latest figures available from Alphabet. So let's get right into it. Starting with the balance sheet, I have highlighted here total cash and cash equivalents and marketable securities. The company has 113.7 billion. This is down from 139 billion from the same time the year before. The company used some of its marketable securities, turned them into cash, and invested in the business. And I have highlighted here one of the areas it invested in was in property and equipment, increasing that area from 97.6 billion to 112.7 billion. These are for things like office buildings, for servers and computers and equipment and things like that. Overall, Alphabet has done an excellent job of generating a sufficient return on that investment. Where I feel a bit, let's say, concerned with Alphabet's management is in its employees. I feel it's got a bit bloated in terms of employee count and employee wages and employee pay. But in terms of asset and asset management, I feel they've done a solid job in that regard. Looking at its liabilities, notably long-term debt, they went from 14.8 billion in long-term debt to 14.7 billion in long-term debt. So liquidity and debt really not a problem for Alphabet. They've got 113 billion in cash and only 14.7 billion in long-term debt. So their balance sheet is pristine, in excellent condition. Let's move on to its income statement. And what they've shown us here is their income statement in the year ending December 31st for 2020, 2021, and 2022. And I've highlighted revenue here on the top because it all starts with sales. And looking at revenue, that's grown nicely from 182.5 billion to 257 billion to 282 billion. So excellent growth in income from in revenue, sorry, from Alphabet. But if you look at income from operations, it increased from 41 billion to 78.7 billion. So excellent growth there from 2020 to 2021. But then it decreased from 2021 to 2022 from 78.7 billion to 74.8 billion. So even though revenue increased by 25 billion, their income from operations decreased by nearly 4 billion. And this follows up on what I mentioned earlier. The company let employee hiring and employee costs get a little bit out of control. Thankfully, they announced cost cuts and some layoffs. Although the way they did those layoffs, I questioned as well. They paid very handsome severance packages to those employees that they laid off. So I'm not so sure how much that's going to help bring costs down. And you could see here costs of revenue increased from 110 billion to 126 billion, a 15.3 billion increase in cost of revenues, and employee wages are included in here, as well as a big jump in research and development from 31.5 billion to 39.5 billion, an $8 billion increase in research and development. So they've, in my opinion, let costs get a little bit out of control. I, uh, from an analyst point of view, I was glad to see that they announced some cost cuts and some layoffs. Although, like I mentioned, severance packages were a bit too much to make shareholders too happy about those cost cuts. And the last statement we're going to look at is the statement of cash flows, again for the year ending December 31st. Alphabet has laid out their 3 years, and what I've highlighted here is their net cash provided by operating activities increased from 65 billion to 91 billion from 2020 to 2021, but then decreased from 2021 to 2022. Now, the cash flow from operations is separated into three segments: operations, investments, and financing. And as an investor, what you want to see is cash coming into a company from its operations, from its day to day business. It's not um, really good when you see the company's cash increasing because of financing, right? If it went out and borrowed money to increase its cash balance, now that's not really a good thing, right? Anybody can go out and borrow money and increase its cash balance. Doesn't mean you've done a good job in the business, doesn't mean that makes the stock more investable. However, when cash increases from operations, that's a good thing. That means the company is getting better at generating cash from its day-to-day business activities. That's what I want to see as an investor, getting better, a company getting better at generating cash from operations. Alphabet did a good job between 2020 to 2021, but from 2021 to 2022, it was relatively flat. The next thing I want to look at is I want to show is purchases of property and equipment, and Alphabet increased from 22 to 24 billion up to 31 billion in 2022. For Alphabet, I like to see this because, like I mentioned earlier, they've done a good job in generating a return on investment. So I like to see an increasing investment from management teams that have demonstrated a good return on investment. If this management team was not good at generating a return on investment, I would not be happy to see this kind of increasing spending in property and equipment. So there's the big difference here. Depending on the company and the management team you're looking at, will determine what you want to see here in this line item from the company. All right, and the final thing I will highlight is the repurchase of common stock. Alphabet increasing its purchase from 31 billion to 50 billion to 59 billion, and this is good news for Alphabet stock investors for a number of reasons. First, because the company has a very healthy cash balance, its balance sheet is pristine, so buybacks are good news. And then secondly, it signals to me as an investor that the management team thinks that its stock is undervalued because they're spending $59 billion to buy back its stock. So it's telling investors that, hey, we think our stock is undervalued and we think this is a good way to use our cash because the stock is so undervalued. All right, so that's all I've got for this video. I hope you've enjoyed this financial statement analysis, and as always, I truly appreciate your viewership. I hope you'll come back and see me next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.